Hello, everyone. This is Debra Richardson, and today I am putting the AP in Happy, where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on-demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team avoid fraud, fines, and bad vendor data. So sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. Fraudsters have evolved again, this time with check fraud because they have found a way to bypass Payee positive pay. So now what? Keep listening. Welcome to episode 360. Fraudsters have a way to pass Payee positive pay for stolen checks, how it works, and what to do about it. So this one, I'm hoping it won't be so long because, I tend to go on and on. So I'm going to try to just outline it and then stick to, the script. And so first, I want to talk about the stats of check fraud, and this is going to come from the 2025 AFP Payments Fraud Survey. They're looking at 2024 activity. And then I want to talk about what fraudsters are doing now that pass Payee positive pay, and I'll explain what Payee positive pay is. And then I'm going to talk about the advice to financial institutions to stop it. And this is coming from the Federal Reserve Board. They actually have an infographic that I'll probably put a link in the show notes so you can take a look at that too. And then from me, I'm going to give some advice to you to avoid. It is not a whole lot that you can do, but there are a couple of things that you can do. And I shouldn't say avoid. Maybe the better word is how to detect it quicker. And maybe it is to avoid. I don't know. We'll see when we get to that part with how you feel about that. And then the next one, and then I'll have some advice to vendors about how they can help, I don't know, avoid or detect it. So let's go ahead and get started. And so we're going to get started first again with the stats on check fraud. And so there is a 2025 AFP Payments Fraud Survey. This is the report, the key highlights. So if you do not belong to the Association of Financial Professionals, I think that's the name of it. Let's take a look. Association for Financial Professionals. So if you don't belong to that membership, I think you get it for free, but you can also purchase it. But if you don't want to purchase a full report, you can download the key highlights for free. And so I did that. And what I found on page 4 is that for 2024, the top payment method that was subject to attempted or actual payments fraud was checks. And this was slightly down from last year, 2023. It was 65%, but in 2024, it was 63%. But it is still much farther or a higher percentage, I should say, than ACH debits, which was 38%, and those are demand debits. And then wire transfers are 30%. And then if you go down to ACH credits, which is just below credit cards at 21%, the ACH credits are 20%, and that's when we send out the EFTs. And so if you just compare the percentages, of the ACHs we send out at 20%, even wires, if we want to just lump everything into electronic payments, are only 30% compared to checks. That is 63%. So this is much wider than ACHs or wires, even though, right, the ACHs and wires, you have much more, probably a higher volume than your checks, depending on your company. Could be true, could not be true. But so checks, though, are still a big area for fraud, and has been trending up. And so let's talk about then how fraudsters are evolving with these checks. And if you guys have listened to my podcast in the past, or you are signed up to my new scam alerts, right, you have probably heard me talking about check fraud and how checks are getting stolen out of the mailboxes. And actually, you don't even need to listen to my podcast or, read my blog or new scam alerts. It's everywhere, and people are reporting it all the time. The FBI put out a PSA in collaboration with the U.S. Postal Inspection Service at the beginning of the year to say, hey, stop mailing checks because these fraudsters are stealing them. But the one thing that we had, or, any company that was generating checks had, is we had the positive pay, or payee positive pay, I should say. And that was supposed to protect our company from bearing the brunt or the liability of that loss, right? Because the check would not be honored. Now, the vendor might take them, more time to get the check, like the payment will be delayed because now you have to, if the fraudster stole the check out of the mail, but it was ultimately, when presented, not paid by the bank. That's all fine and good, but you still have to, void and reissue the check and pay the vendor. And, now their payment is delayed, but you didn't lose out on the money. And so, payee positive pay was something that would, kind of be a fraud prevention control or tactic or strategy or whatever you want to call it. You would set that up with your bank. Now, one thing that I do want to point out is that for some banks, there is a difference between just plain positive pay versus payee positive pay. And so positive pay is after your check run, you send a separate file to the bank that includes the check number and the amount of the check and of the checks that you wrote in that pay cycle. And so that means that when that particular check is presented, it will not be paid unless the check number and the amount matches. And so the way the fraudsters got over that is they left the amount alone, they left the check number alone, and all they did was whitewash it or whatever they do to replace the original payee's name with a name of an account, right, that they control. Now, when you get to payee positive pay, then that means that you're not only sending the check number and the amount to the bank in that file, you're also sending, though, the name of the payee. And so that was supposed to save you But now the fraudsters know a way around that. And this came from the not financial, but the Federal Reserve Board, and they talked about, or it's in an infographic that is called How Criminals Commit Check Fraud Using Stolen Business Identities. And so, again, this came from the Federal Reserve, from the fedpaymentsimprovement.org, but I'll put a link to this infographic. It's 3 pages. And so, what they said that the fraudsters are doing to bypass payee positive pay is that they impersonate the payee on the stolen check. All right, so how they do that? Well, they do that. One, they leave the check in its original condition so that they can bypass alteration and counterfeit check detection tools. And what they do is that they will steal the check, and that check is payable to a business. The criminal will then register a new business with the same name as the intended payee, right, as your vendor. They will just register it in a different state instead of changing the payee on the check. And so they don't do anything to the check. They steal it, but they don't do anything to the check. They just take the name of your vendor and they will register that vendor's name in a new state. Now, once they register the business in the state, they will go and they will open a deposit account for that new business that was just registered, and then they will deposit that stolen check. Now, for them, their next step is to get the funds dispersed, right? Because the new account has been opened, and then they will disperse the funds via wire, and then the new business account is then abandoned. Now, the last part is finding out about the fraud, and how the fraud is discovered is that the actual vendor that was expecting the check for payment will reach out to the payer, right, the issuer of the check, your company, your department, maybe even you, and say that they didn't get their payment. And so when you contact the bank or look through your records, you'll see that the check did come in, it was unaltered, and then the investigation can go from there to show that it was deposited in that new account, and that new account, right, was set up using the vendor's actual information, but in a different state, and then the investigation will just continue. Now, that is the new strategy to bypass positive or payee positive pay. Now, they also note some variations of the trend. One is to create a synthetic business registration that intentionally uses a very similar name as the payee business on the stolen check, or maybe they assume the identity of the business by changing or pretending to be an authorized party on the business registration or with the financial institution. The last one is opening a DBA account to mimic the legitimate payee business. So, all right, we know what this new fraud is. So let's talk about how the Federal Reserve, like what advice they give to financial institutions to avoid it. Because if you think about it, it's really I think anyway, with the financial institutions to not open up that account for that second business that was registered in a different state just to fraudulently, right, deposit the check. All right, so here's what the Federal Reserve says that the financial institutions can do or look for to prevent this from happening. So first of all, the identity information of the authorized owner of the business opening the account It raises concerns during the KYC process. If that happens, then that might be suspicious. Also, the individual opening the business account really doesn't appear to have a clear understanding of what type of business it is or what they do. And then the last thing is that identification indicates, right, an implausible geographic difference between the individual's location and the business. Now, what I really like, and this one, I think at least one of them should have been something that put up a real red flag, and that is the date of the deposited check is before the date the business was registered. And that has to be because the checks, they've stolen the check. So that means the check has already been printed, which means the date should have been right a previous to the date they stole it, which should definitely be previous to the date that they registered the business in a different state. And then, so that's the big one. They've got two more, and these are all under what they call check anomalies. And so the second one is payee business on the check is in a different state than the address on file for the deposit account that was opened. And then last one is the inconsistent locations for the business address, authorized signer identification, or the location of the sender receiver according to the check. And so those are some really good ways, I guess, red flags that the banks should have been looking for. Again, especially that first one where the date of the check is before the date the business was registered. I don't know, maybe if you've got, a smaller business that, had your contract or your business before they actually, registered in the state. I wonder, could that be a thing if that could happen? But how often does that happen? At the very least, it should have been some red flags for the financial institution, and they could have stopped the fraud right there. All right. So, with that, then, I do want to, since we know that fraudsters are getting away with it, I do want to give you some advice so that you can try to, and I don't know if this is really avoided or just detect it sooner so it doesn't happen. Maybe that is avoiding. But here's what I have. So, number one, obvious, right? Convert as many check payment vendors as possible to ACH or electronic payment. But I will put this caveat in there because we saw this happen during the pandemic, right? March of 2020, when everybody abruptly went home and it was hard to write checks. There was quite a few folks, right, that made it a focus to convert their check payment vendors to ACH payments. But the problem was is that they didn't have enough controls in place for those inevitable fraudulent emails coming to say change my bank account, right? Especially when you do it as like a mass initiative, because you're expecting all of those emails to come in, and some of those, right, because you were paying them by check, they didn't have banking information on file, but some of them, because, right, that initiative is going out. Fraudsters, right, were in our emails back then too, right? They took the opportunity, and plus they knew everyone was doing it anyway. And so even if they didn't know whether a vendor was check payment or ACH payment, they just could have, thrown a dart at a wall, right, for any company at that time and known that they were getting lots of emails about payments. And so sliding in a fraudulent email would have been much easier to get away with because, our volumes were high and we were used to or in the habit of either adding banking or changing banking. And so a lot of fraud got through during those time periods. And so What was missing back then was controls to put into place so that even if a fraudulent email was received to change banking or any remittance information, like remittance address for a check, right, then it still would not go through because it would be detected uh, through the process of either making the change or sending the payment and following up on that payment, which you'll see that in the next tip. So it's really a great segue to the second part, right? And that is to contact vendors to verify that they have received the check. And I usually say that when there has been a change to a remittance address, because when you send a payment, the vendor should get it at least within 7 days. I know the USPS, Postal Service here in the US anyway, they extended the time it would take for some mail to get to its destination, but definitely within 7 days they should have it. And so I usually again say that for changes or when a check is of a substantial amount. And when I say substantial amount, I mean, right, how much can your company afford to lose? And so that can be anywhere depending on your company. I've had one company, I will give this example, that said we can't afford to lose anything. And so we contact all of our vendors that have had remittance changes, right, to verify that they have received their check. So if they had a change of remittance address, they contact the vendor within 7 days of issuing the check to make sure they received it. Now, if you are still sending out a lot of checks, I would recommend you do the same thing, identify what threshold, and then contact the vendor and make sure they received it. Again, based on how much your company can afford to lose. If you are not sending out a lot of checks, you might just want to do that with your checks that you have sent out just to make sure that they haven't been stolen. Now, by finding out whether or not the vendor received the check within 7 days, that means that if the vendor did not receive the check because the check has been stolen, because the fraudster that stole the check or that now has the check is going to go and register that vendor's name in a different state. That takes time. So if you have identified that the vendor hasn't received the check, now like within 7 days, that you can void and reissue the check much quicker than waiting for the vendor to contact you to say that they didn't receive the check. And so what that means is that by the time the fraudster steals the check, registers the company in another state, creates or opens a new business account, and then deposits the check. And they most times with new accounts are not going to receive the full amount of the deposited check in the first place. So the hope is that you will void that check because you have to reissue a new one before the fraudster has time to get the full amount of the funds, if they get any amount of the funds. Hopefully they don't get any. So I do want to say I have a training in the Vendor Process Training Center. It's actually coming up later today if you are listening to this when the podcast is originally published on Thursday, October 16th, but it's fine. You can still watch the recorded version if you like, enroll and enroll, and then watch the recorded version. But the training is called Validations to Prevent Check Payment Fraud, Your Accounting System the bank and your vendor team. And what I talk about is what can be done within each of these functions or areas, right, to prevent check fraud. And so definitely going to be talking about this. So make sure that if you are interested, you check the link in the show notes. All right. Now, the last thing is the advice to vendors. I don't know how many vendors actually listen to this podcast, but you know what? You can put this information in the instructions to the vendor because I actually just saw this come out in my email because they now have a mobile app. And what am I talking about? I'm talking about the USPS, United States Postal Service, informed delivery. And so what that is supposed to do, and many of you probably have it personally, and maybe you have it professionally for your company as well. I have it for both. But the point or goal is that the vendor can track when they are expecting a check because they can see it as part of the informed delivery. Now, I will say a lot of times when I am supposed to get checks from my clients, or when I know that I'm getting checks from my clients and I actually check informed delivery. I tend to see those as they couldn't do an image, and I don't know why that is, but I don't know if it was just an anomaly with mine or if they don't do check images, but they should. I'm just saying every time I tried to see one, it said that it couldn't produce an image. But I will say I do not receive a lot of checks either. So others may have a different experience. And I am sure that that is true because otherwise, why would USPS, and I think this did come from them, this advice came from them. Why would they give that advice? So I would add in your welcome letter, if you have one, or just, put it in the instructions to your check payment vendors to get U.S. informed delivery if they don't have it. And if they do, tell them to make sure that they check their informed delivery account on a daily basis so that they know when the check is expected to be there. Because when that check is delivered to the post office, then it is scanned. And if for some reason it doesn't get there, then they can let you know much sooner, right? That they didn't receive the check because they know when it's supposed to come. Now, the caveat with this, or the place where I don't think it's going to work, is if the check is stolen right before it gets to the post office. So don't put your mail in the blue mailbox. And if you need to drop off mail, then make sure you drop it off inside the post office. And that way it will get scanned. And hopefully it will get scanned before some internal fraudster, right, that has maybe colluded with an external fraudster. And I don't know if you are signed up for my new scam alerts, but I just had one that said, or that talked about how an employee inside of the U.S. Postal Service, when they saw a check window envelope or an envelope that looked like it had a check in it, they would look through the window to see how much it was. And if it was enough money, they would actually stuff the check or the envelope with the check in it in their pants. So you never know, but don't make it easy for fraudsters. Don't put it in the blue mailboxes. Make sure that it goes directly to or inside of the post office or with your mail carrier if they come into your office to collect it. But I always seem like I'm the bearer of bad news. Sometimes the mail carriers will do the exact same thing. If they know that there are checks in what they pick up, they may steal it and then try to deposit it into their own accounts. That was another new scam alert. So, the post office has its own issues. External fraudsters are not making it any easier. but more and more we're starting to hear about the internal fraudsters as well. So, you know what? Let's just go back to that original advice of converting as many as possible to ACH. Again, making sure you put controls in place first. And if you want to know what type of controls to put into place, not only that, but authentication techniques, best practices, vendor validations, right? A whole framework to avoid fraud, fines, and bad vendor data. I'm going to put a link to a 4-hour workshop that I have the last Wednesday of every month, live, or you can watch it on demand. And I go through the entire uh, authentication, validation, management framework that has 5 authentication techniques, 29 internal controls, 17 best practices, and 18 vendor validations, again, to avoid fraud, fines, and bad vendor data. Every year, by the way, I update them. And this year, I've got a couple more to add because of check fraud. So make sure that you go into the show notes and click through to that workshop if you like to sign up for it. All right, so I think that is it for today, guys. It was a lot. New frauds, fraudsters are always evolving. So thanks, everyone. I hope you enjoyed the 360th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.